Good evening. This is Ken Long from Tortoise Capital. It's August 20th, 2009. Quick review of daily reports to prepare us for tomorrow. Still in bull quiet, mid-range on the annual and 10-day trading range, although we are very close to overbought now after 3 days of gains. Gap stat, we're at 53% gap in reverse, so it's almost no edge there. I'm interested in the 10-day max pain candidates for tomorrow, Alcoa and Caterpillar, AA and CAT. Both underperformed today. GE was a big winner, and even though it was a big winner, it's still one of the max pain candidates, so that makes it very interesting for follow-through on tomorrow. No signals in the overreaction and the channeling, although both of them had open positions today and are to be closed tomorrow for very nice trades in both systems. Volatility declined down to an 8 on the index level, so we're still well within bull quiet. And you can see our volatility very low here. I want to highlight that ADX has flattened out and getting ready to hook back up, and the plus DI is starting to pull away from the minus DI based on 3 days in a row of improved performance after the volatility event on Monday. You can see that in the highlight. And you can see a little closer here, the steady improvement in plus DI as the market resumes its move. All of the triple screens from earlier this week have all performed very well. Kraft and Campbell Soup are notably good. And in the Dow 30 Williams percent R, these four, Alcoa, GE, Intel, and Boeing, all are less than 40, and so they're at the low end of the 10-day trading range, and there's some opportunities. These five have been big winners the last 10 days, leaders. Merck, Bank of America, Walmart, Coke, and Johnson & Johnson. And so those are trades that if you have them, you should be concerned about preserving the profits. Quick look at the Tortoise Dow report. Again, the green symbols are Dow 30 stocks that had exceptionally good performances today, and the reds were the underperforming ones. So I'm interested in Alcoa because it was terrible today, and it's the worst on the 10-day max pain. It's in the red on a 3-day max pain, so it's been suffering for 3 days in a row. The ATR percentage of 5.67 is the reason why I really like it as an intraday trading candidate, because it moves so much. You can get a lot of juice out of it in a single day. And on the 10-day index, you can see that it's at 17, and so that puts it at the low end of the Dow 30. So that's postured for a rebound tomorrow. I like GE, which is it's in the red on the 10-day max pain, but it actually had a big breakthrough day today. So it still has 6% to get back to its 10-day swing high, and that's the reason I like it as a potential candidate for follow-through tomorrow. It was well oversold. It was a max pain candidate, and it was a leader today. Good chance tomorrow follow through if we see strength in SPY. So that's how you read this report here. What's interesting to note is that all the symbols that are in green tend to be in the upper half, which is near the maximum pain category. We've sorted by 10-day max pain here. And all the very low volatility ones have been the leaders over the last 10 days. And so there's not much room for those guys during the day. This is a new report that I've been working on this week, and what it does is it arrays the Dow 30 over here once more, and what I've done is rank them by the 10-day index, which is the equivalent of Williams percent R. And then on the right-hand side, I've looked at 30 of the usual suspects for big fat ETFs that represent broad market indexes and regions and sectors, and it's the same analysis. So we're looking at today's price change and the percent change, a 10-day and a 52-week index for short-term and long-term, the 3-day and the 10-day max pain, and then just what a swing target for a return to the high of the last 10 days would be for rapid calculation of reward to risk. I noticed that I pointed out in the previous or earlier in this video, Alcoa and GE. being opportunities for two different reasons. Alcoa hasn't bounced yet. GE is already in the first day of its bounce and may continue. So that's why I like that one. I would just highlight over on the ETFs that financials and real estate were big winners today. Real estate, IYR, was terrible on the 10-day max pain. It's highlighted red, so it's one of the worst. And it's one of the best on the 3-day max, so maybe the rebound from oversold is started to occur. Potential for follow through there. You can notice just how terrible natural gas was, down 18% in 10 days, 7% on 3 days. The negative numbers in the index values mean that it closed below the 10-day trading range. So that's an absolute breakdown, and that's worth observing. The other thing I want to highlight in the ETFs is the commodity complex here of agriculture, mixed commodities, and oil. All are well into the lower end of the 52-week index, all around in the lower 20% of their annual trading range, with agriculture being especially bad on its 10-day index. So again, these are almost washout candidates that are of interest to us. So if we see some profit taking in equities and the equity ETFs, there's a chance maybe it cycles to commodities, so we'll be alert for strength in commodities. So if market down and commodities up, those would be candidates for rapid trading tomorrow. So that's a quick look at the daily bundle of reports, looking at the Dow 30 and the liquid ETFs. Thanks very much.